In accounting for banking companies, we discuss about accounting policies and international accounting standard requirement in respect of banking accounts. And also we discuss about preparation of income statement, balance sheet, cash flow statement, and various disclosure as required by the international accounting standards or international financial reporting standards. If we see the currently at a global scenario, we heavily depend upon financial institution for most of our financial requirements. Banker plays very important role in the economic life of the nation. The health of the economy is closely related to the soundness of the banking system. Although banks create no new wealth, but their borrowing, lending, and relating activities facilitate the process of production, distribution, exchange, and consumption of wealth. Today, modern banks are very useful for utilization of resources of the country. The banks are mobilizing the saving of the people for the investment purpose. If there would be no banks, then a great portion of the capital of the country would remain idle. And a bank has a matter of fact is just like a heart of the economic structure of capital provided by it is like a blood in it. And in accounting for banking system, Banking Regulation Act under Section 5 defined as banking the accepting for the purpose of lending or investment of deposits of money from the public repayable on demand or otherwise and withdrawal by check, draft, order or otherwise any other material which are used as a banking regulation in banking sector. The main features of banking company are the borrowing, raising or taking of the money, the lending or advancing of money either upon or without security, the granting and issuing of letters of credit, traveler checks and circular notes, the buying and selling of bullions, the buying and selling of foreign exchange, including foreign bank notes, contracting for public and private loans, negotiating and issuing the same, undertaking and executing trust are the main features of banking sector. The acquisition, constructing, maintenance and alternation of any building or works necessary or convenient for the purpose of the company. Carrying on and transacting every kind of guarantee and intimating business, the collecting and transmitting of money and securities, undertaking the administration of estates as executor, trustee or otherwise. When we discuss about financial statements are a structured representation of a financial position and financial performance of an entity. The objective of financial statement is to provide information about the financial position, financial performance and cash flows of an entity that is useful to a wide range of users in making economic decisions. And when we discuss about the financial position definitions, what is financial statement? When we discuss about financial statements are the reports that provide the detail of the entity financial information, including assets, liabilities, equities, incomes and expenses, shareholders' contribution, cash flow and other related information during the period of time. Here, when we discuss about purpose of financial statement, the objective of financial statement is to provide information about the financial position, performance and changes in financial position of an enterprise that is useful to a wide range of users in making economic decisions. While we meet their basic objective, financial statements must be useful and the information relevant and reliable are used here. And when we discuss about risk which associated with banks, in risk which we discuss about, the risk associated with banks. Our first one is credit risk. When we discuss about credit risk is the risk that one party of the financial instrument will cause a financial loss for the other party by failing to the discharge of an obligation. And when we discuss about currency risk of banks, currency risk means the risk that the fair value or future cash flows of a financial instrument will fluctuate because of changes in the foreign exchange rates. The third one is interest rate risk. In interest rate risk, the risk that the fair value or future cash flow of the financial instrument will fluctuate because of changes in the market interest rates. When we discuss about liquidity risk, in liquidity risk, the risk that an entity will encounter difficulty in meeting obligations associated with financial liabilities that are settled by the delivery cash or another financial assets. And risk associated with bank like loan payable. In loan payables are financial liabilities other than short-term trade payables or normal credit terms. When we discuss about market risk, in market risk, the risk that the fair value or future cash flow of a financial instrument will fluctuate because of changes in the market prices. And market price comprises three types of risk like currency risk, interest rate risk, and other price risk. And when we discuss about other price risk of the risk which are associated with the banks, the risk that the fair value or future cash flows of the financial instrument will fluctuate because of changes in market prices. Whether those changes are caused by factors specific to the individual financial statement of financial instruments or its issuers, or by factors affecting all the similar financial statement traded in the market. And here when we discuss about what are the main users of financial statements, after risk associated with banks, the main users of financial statements are investor groups, employees, lenders or other banks, customers, government, prospective investors, publics are used financial statement. In accounting system, the accounting system of a banking company is different from that of a trading and manufacturing company. A bank has a large number of customers whose account ought to be maintained in such a way so that these should be kept up to date in accounting system. When we discuss about the features of banking accounting system, in feature of banking accounting system, entries in the personal ledger are made directly from the vouchers. From such entries in personal account, each day summary sheet in total are prepared. The general ledger trial balance is extracted and agreed every day. This is the third one feature. And fourth one feature is a trial balance of detailed personal ledger is prepared periodically and get agreed with general ledger. Two vouchers are prepared for every transactions not involving cash, debit and credit vouchers in a features of banking accounting system. And when we discuss about book requirements, which are very useful in banking accounting systems, the first one is receiving cashier counter cash book, paying cashier counter cash book. The third one is current account ledger. Fourth one is loan ledger. Then cash credit ledger, investment ledger, saving bank accounts ledger, recurring deposit accounts ledger, and bill discounted and purchase ledgers are the main books required for any banking system. When we discuss about principal books of accounts, are the main books of principal books which are used in accounts are cash book. In cash book, which gives the summary of the receiving cashier's counter cash book and paying cashier cash book. In general ledger, this ledger contain control account for the subsidiary ledger listed above and account of expenses and assets not covered by the subsidiary ledger. When we discuss about notes and instruction for completion, The formats of balance sheet and profit and loss accounts cover all items likely to appear in these statements. The words current year and previous year used in the formats are only to indicate the order of presentation and may not appear in the account. The figures should be rounded off to the nearest thousands here. These all are the notes and instruction for completion. Now we discuss about the reserves and surplus under schedule number 2. What are the main particulars which are used as a reserves and surplus? The first one is statutory reserves, journal reserves, capital reserves, investment fluctuation reserves, workmen compensation fund, sinking fund, surplus profit and loss appropriation account, building fund, depreciation fund, tax fund, and capital redemption reserves are the main reserves and surplus which are used in the accounting for banking account system. When we discuss about deposits, in deposits here we see the main particulars are fixed deposit, saving deposits, current deposit, current accounts or recurring account deposits, loss account or capital and loss account. Other deposit exempt income tax deposits are used under schedule number 3 as a deposit. And when we discuss about borrowing, in particular we discuss about borrowing from other banks, borrowing in country or outside the country, inside institution or outside the institution like central bank and other banks, in the country and outside the country. In other liabilities, we discuss about bill payable, outstanding expense, unpaid dividend, income received in advance, inter-office adjustment, reserve for unexpired discounts are used as other liabilities under schedule number 5. When we discuss about cash in hand and cash with central bank under schedule number 6, where we use cash in hand with bank, balance with central bank are used as a cash in hand with central bank. And when we discuss about balance with other banks and money at call and short notice under schedule number 7, where we use balance with other banks, money at call and short notice, short term loan given by bank to its esteemed customers are used as a balance with other banks. And when we discuss about particular and its investment particulars under schedule number 8, we discuss about government securities, bonds, mutual funds, equity shares and of other companies, and gold. Then we discuss about advances. In advances we discuss about the main particulars are term loan, bank draft, cash credit and bill discounts are used as advances. In fixed assets under schedule number 10, we use the main particulars are premises, furniture, fixture, equipments, land and buildings, plants and machinery, motor vehicles, computers are used as a fixed assets. And in other assets we use prepaid expenses, silver, non-banking assets, inter-branch adjustment, accrual incomes and stamps in hands are used as other assets. In contingent liabilities under schedule number 12, we use bill receivable or bill for collection, forward exchange transaction, future contracts, acceptance, endorsement and guarantee, liability for bill rediscounted, disputed liabilities, income tax under appeal, income tax deposits, claim not acknowledged as debts, and liability for partly paid investments are used under schedule number 12 as a contingent liability. In interest and under schedule number 13, the main particulars are interest on term loan, interest on cash credit, interest on bank overdraft, discount on bill discounted, income on investments, interest in balance with central bank, any other interest incomes are used as a interest and under schedule number 13. And in schedule number 14, other incomes are draft, making charges, commission, exchange and brokerages, locker rents, dividends, profit on exchange transactions, transfer fees and registration fees, profit on sale of fixed asset, less loss on sale of fixed asset, profit on sale of investment, less loss on sale of investment, profit on revaluation of fixed assets or investment, and miscellaneous incomes are used as a schedule number 14 under other incomes in accounts for banking companies, which are useful to making us the accounting system or account system. In interest expended under schedule number 15, we use the main particulars of interest expended or interest on fixed deposit, interest on recurring deposits, interest on saving deposit, interest on borrowing from central bank and other banks, and interest on any other deposits used as a interest expended. In operating expenses, we use rent, rates and taxes, insurance, salary, director fee, management fee, printing and stationery fee, audit fee, depreciation, provident fund of employees, journal expenses, law charges, advertisement and publicity, repair and maintenance, sundry charges are used as operating expenses. You must know about that accounts and each and every hints particular that's which are very useful for our accounting systems, and it is used in a banking accounting systems, and it is useful for understanding that how we use that particulars and how we use that items in our accounting system. In provision and contingencies, the main particulars are bad debts, provision for doubtful debts, provision for tax, provision for contingencies, provision for depreciation, and other provisions are used as a provision and contingency here. When we discuss about explanation of some terms related to balance sheet, money at call and short notice, it means that these items appear on the asset side of the bank balance sheet and represents temporary loans to bill brokers and other banks. If the loan is given for 1 day, it is called money at call, and if the loan cannot be called back on demand and will require at least a notice of 3 days for calling back, it is called money at a short notice when it is for 3 days, and when it is moved for 1 day, it is called call back or demand, and it's when it is required for 3 days, it's a money at a short notice. And it also include deposit repayable within 10 days or less than 15 days notice lent in the interbank all money market. The rate of interest on which money is lent fluctuate every day, sometimes very sharply, more than 30% depending on the demand and supply of money in the money at call and short notice. And when we discuss about advances in accounting for banking companies, advances appear on the asset side as fourth head and include loans, cash credit, bank overdrafts, and bill discounted and purchased. Banks generally advance money to their customers in the form of loans, cash credits, overdrafts, and purchasing and discounting of bill. In provision in respect of doubtful advances are deducted from advances to the extent necessary, and the excess provision for doubtful debts is included under other liabilities and provisions. In cash credit, when we discuss about cash credit and its responsibilities and its usage, it is an arrangement by which the customer is granted the right to borrow money from time to time up to a certain limit. Cash credit is usually given on hypothecation or pledge of stock. The bank usually charges a higher bank interest on the actual amount withdrawn than that charged on loan because the bank has to keep the amount allowed as cash credit. In overdraft, we discuss this facility is available to a customer who operates a current account with the bank. This facility is granted to customers who have high goodwill and need for honest dealings. In loan is advance of fixed amount to a customer to be withdrawn in lump sum by him. Interest is charged on the total amount of the loan agreed to be paid to a customer whether he uses the full amount of the loan or not. So customer prefer to take cash, credit and pay interest at a little higher rate. In discounting of bills, discounting of a bill means making the payment of the bill before the maturity date of the bill. While making payment of the bill, the bank deducts the discount for the unexpired period of the amount of bill discounted. The bank keeps the bill with it till the maturity date and gets its payment for the customer on the due date. In purchasing and discounting bills, the banks may purchase or discount clean or documentary bills at the current rate of the interest. And in non-banking asset, a banking company is not allowed to deal directly or indirectly in the purchase or sale or barter of goods except in connection with its legitimate banking business. But a bank can always lend against the security of asset. The bank may have to take possession of the asset given as a security if the loanee fails to repay the loan. And in rebate on bill discounted or unexpired discount, it means that this item is like interest received in advance and represent unearned discount for those bills which will mature after the closing of the financial accounts. In journal entries for rebate in bills discounts, we use rebate on bill discount account debit to discount and credit, and discount and account debit to profit and loss account, credit in a journal entries for rebate on bill discounted. And in bill discounted, we also use bill discounted account debit to customer credit to discount and credit. In discount and account debit to profit and loss account, credit to rebate on bill discounted credit. If the date of bill is not given and month of the maturity after close of the year is given, add 3 days of the grace to calculate the bill date. And when we discuss about accounting policies at the last, in accounting policy, in order to enable the users to understand the basic and which the financial statement of the bank are prepared, accounting policies dealing with the following items may need to be disclosed, like the recognition of the principal type of income and valuation of investment and dealing securities. Here we also discuss about income statement where we use income of a bank, interest based income where we use interest, and non-interest income which is fees for service. And in fees of service we also used transfer of funds, collection of checks, periodic payments, portfolio management, periodic collection, other agency functions, general utility functions which are used as a fee for services. And here we also use for non-interest income. First one is fee for services, then interest on investment, commission, brokerages, then discounts are also used as a non-interest income. And in expenses of a bank where we use interest expense, State Bank of Pakistan expense, borrowing from other banks, borrowing from general public, provision against non-performing loans are also used as the expenses of bank here. And here we also discuss about provision against non-performing loans where we use non-performing loans, and also we discuss about different classification and rules which are used in non-performing loans, like we use substandard, we use doubtful, loss, and many other determinants, threat to income, and provision to be made. What are the main provisions which are made here are used as a accounting for banking companies. When we discuss about the non-performing loans, in non-performing loans is the loan that is in default or close to being is default, and many loans become non-performing after being in default for 90 days, but this can depend on the contract terms. I hope that you got each and everything and understand accounting for banking companies and how we use the system of accounts in the banking